Okay, this is the last section of this chapter, and I'm again just going to work through the question, but kind of highlight the key points again. So this is really what I think you could get. When I say could get, the type of thing you have to be very aware of, dealing with these long periods. I think they want to test a few things. They want you to recognize that we must split a period of account into its chargeable accounting periods, um, and deal with capital allowances as such, if you like. So we did this in class, but I'm just going to do it again to make sure you go through this and you're happy with the revision. So the key points here are, what are we saying here? Adjust the profits for the period, and then time apportion, if you like, trading profits before capital allowances. So don't prepare a 15-month period, a 20-month period, and then with capital allowances as you would for individuals. No. Separate calculations and treat each time apportion AIA and WDAs, time apportion them, and deal with it, and we'll see it when we come to it. The accruals basis, whereas here we are, interest, of course, all based on accruals, and then so chargeable gains and the qualifying will occur in the actual period, chargeable accounting period it happens. So a general rule that you'll come to be happy with, that you'll come to see typically, is that um, company tax is paid 9 months and 1 day after the end of each chargeable accounting period, which is not large. Large is considered to be 1.5 million. You'll see this very normal, simple Section 8 question. Always 9 months, 1 day, 1.5 million. And then that's the case. Otherwise, you'll have to then do payment on account if it's greater than this. But anyway, and also the other little thing is you don't have any subsidiaries, because if you have subsidiaries, we'll have to split this and see. But we're not talking about that now. Split this and divide this 1.5 million by the number of subsidiaries, and then look at it from there. But anyway, key point here is that you would do the chargeable accounting period 1, do 9 months and 1 day. Chargeable accounting period 2, do 9 months and 1 day. So you can see HMRC want their money. But in terms of filing the actual paperwork, just a straight one file for the 12 months at the end of the long period of account, they're quite happy with, right? So you wouldn't, another little cheeky question, so you wouldn't file after the 9 month, sorry, after the first chargeable accounting period. You'd file after technically your second chargeable accounting period. Cool, great. So I just want to highlight, just because, and again, like I say, only because I think this was an important, this was just an important point for a few of the areas. And the first one, I don't think this is such the issue here, is trading income. I think you probably were very all right with that. So when you look at this question, it asks you to basically calculate the corp tax for these accounts for a 15-month period. So what do we have? We have something that looks like this. So we have a 30th of June 2019. And this business starts on the 1st of April 2018. So the first 12 months takes us to the 31st of March 2019. So we have a 12-month period here, and we have a 3-month period here. So my first job is to split this, if you like. So actually, what I need you to do is, I'm sure you have the workbook. So either you can, because I don't seem to have enough space, but I'll just keep working. So I might be flicking between pages. So what we have here is 12 months. So you have 12 over 15 times the 380,000. And here we have 3 over 15 times the 380,000. So we have this, first of all. So that's how we deal with that. Now, in terms of the bank interest, I think I'll do it here. In terms of, remember I mentioned that we're dealing with interest accrued. So the question is, what is the accrued interest for the 1st of April to the 30th of March? That's your task. So, I can talk through it, but I think there's no such, you can't beat simple good T accounting. So in terms of interest, what we're dealing with here is, we see here, it tells us that we have bank interest accrued. Remember, this is money coming to you, so you are owed £6,000 interest accrued. If you like, balance brought down at the 1st of April, right? April 2018. So 1st of April I mean, imagine I'm writing it here. 1st of April, 18. This is here on this, of course. Remember, good accounting. It's not up, it's here. So that's it, interest accrued. So what's happening? It says that during the year that you receive, so typically what would happen, right? If you remember your good accounting, this is interest accrued, this is interest income. What would happen here is that like any receivable, this is like trade receivable, exactly the same way. You will sell some more. So you would, I'm just going to put here, you would sell some more on credit. This is a revenue, isn't it? So debit the receivable and credit the revenue, so to speak. Then you will receive something in the bank during the year, and typically you'd be owed some more by the end of the year, something along those lines. Anyway, so you receive some more. It then says you receive during the year 22,000. So I'm going to do 22,000 here, and I have bank 22,000. Then it says that bank interest accrued at the 31st of March. So at the end of the year, you are owed 6,200. So I'm going to have carried down 6,200, and then I'll close off. Right, and that's exactly, so my new brought down is 6,200 at the beginning of, as at the 1st of April 2019. I'll say that again. Opening accrual 6,000. You sell some more, or you have some interest coming to you in the year. I don't know what it is. That's what I'm trying to find. Incomplete records. Then during the year, I get 22 grand. Debit bank 22 grand. Credit interest accrued. And then I have a carried down figure of 6,200. So the question here is, what is X? And just by doing my maths, I can see here I have 22,600 sitting in here, 22,600, and therefore here I have 22,200. So my interest accrued for this period is 22,200. So now I have to do exactly the same thing for my 3-month period. So I'm starting off with interest accrued of 6,000. So it then tells me that, so that's my, I'm just literally transposing this over here. So that's my interest accrued, 6,000. And then it tells me that bank interest accrued at the end of that period is 12,000. So I have a carry down figure of 12,000. I haven't received anything in the bank as at I haven't received anything in the bank in that short period. I mean, this comes in here, so I haven't received it, so nothing can go. I can't have a credit interest accrued debit bank. So it literally means that if that's the carried, well, sorry, this is 6,200. It means that the interest accrued in that short period is 5,800, right? So opening accrual, then this happens, 8,800 accrues. We still haven't received anything. That's why you have the carry down of 12. So now bring down 12, if you like, at the 1st of July 2019. So your interest accrued for that short period is 5,800. I think that's where the little dramas are. So the interest accrued here is 5,800. So you can, again, sort of think through this and work on it. So that's that. Covered. Rental income, it's over the 15-month period, so we literally split that, take the 10 grand, split that 12, 3, 15th way, 12 over 15 times 10,000, 3 over 15 times 10,000. Do that splitting and you're done. Then chargeable gain asset disposed on the 1st of June. So this happened in this period. So we have 16,000 coming in here, and this donation happens in this period. I'll take you to the answers in a second, but I just want you to sort of see the working, what happened in this period. Right, let's deal with this. Let's deal with this. I can now move here and deal with this capital allowance. Again, like I say, the capital allowance, you're literally dealing with it in its over 12 months and then over 3 months, right? Which means that we will accord the annual investment allowance based on that, in that sort of order. So what do I have here? Here I have this balance brought forward on the 1st of April 2018 at 20,000. Okay, thank you very much. So what do I have? 1st of April 2018 to the 31st of March 2019. A number of things happen. I buy a machine. So I buy a machine for 25,000. I buy this machine for 25,000. AIA will cover all of this. It's a 12-month period. 25,000 capital allowance, 25,000. Okay, thank you very much. And then it says that I sold a lorry, so I sold it for 3,600. So um, my new whatever my new balance on my main pool is 20,000 minus 17,000. Sorry, 20,000 minus 3,600 is where are we? Is in maths 16,400. Great. Then I multiply this, of course, by 18% because I'm allowed 18% there. Just get my calculator, and then 4.18 times 16,400, and that's 2,952. So in class, I forgot to actually take off the 2,952 in my rush. So that's 2,952 over there. So now I have here the tax written down value for the main pool. So basically reducing balance, isn't it? 16,400. So I have 13,448. Right. So I have 13,448 over there. So that means that for the first period, this period, these are my capital allowances. Add these two things together, and that takes us to 27,952. So I will apply this capital allowance against the trading income here of 12 over 15 times 3,800, right? Because that's the capital allowance in relation to this. You can see before capital allowances. So I need my, if you like, adjusted trading income as well. So then I now do the last period, which is the 3-month period. So I'm just going to take this out. I mean, it's a video, so you can always look at this again. Oops, or actually, oh, I can't undo that now, can I? Because I've forgotten. Oh, yes, it was 13. It was 13,448. So let me just get rid of this. So now I have 13,448 as my new where are we? 12 minutes. Okay, good. We're almost there. 15. Thank you. Bear with us. So I have here now 1st of April 19 to the 30th of June 19, and I have my tax written down value at 13,448. And then what happens in my year? So it says here I buy equipment for 60,000. That's the only thing that happens. So good. And typically you'll see that your questions will look like this. Not too much work if you're already doing a lot of, your capital allowances won't have too many things. So here we have here, but remember it's a 3-month period, unfortunately. So my 200,000 is restricted to just 3 months of the year. So that's 50,000. I'm only allowed 50,000. So I have a 60,000. So I'm allowed 50,000. This is not this here. So that's 50,000. So 10,000 spills, if you like, the balance spills into my main pool. So I add the two things together. So I have 23,448, and then multiply that, of course, at the 18%, 23,448 at 18%, but also, of course, because you don't have a full period, you have that 23,448 times 0.18 times 3 divided by 12 gives you 1055. So you only allow 3 months because you don't have it's a short period. So you can see straight away with companies that what we can never see is a long period of the 200,000 times some whatever 18 over 12 or something fancy that way, because we just don't have long periods with companies, long chargeable accounting periods with companies. And so what we now have is those are your capital allowances that we have. So we have 51,0555, and then that's what we use against the trading profits in that year. So look at that. So just bringing us to this, we can see here that this is all nice and neat now. Your exam is done on Excel, so hopefully you can use your appendix and bring your figures back in to make it look nice and pretty. And you can see everything we have talked about here. These are all the figures here that you would have in your appendix. I imagine yours would be messier than this, but if you like, if you can have a working page and then come back to put into your final page to make your work look good this way. Cool, great stuff. Yeah, that takes us close to 15 minutes, and that's the end of that chapter. So we'll be moving on to chapter 14 after this. See you there.